What's going on, everybody, and welcome back to InvestQ. I got a pretty extensive video today, and it's going to be talking about a few things that you already know what it's going to be covering regarding Castellum CTM, a stock that we've covered numerous times on this channel. And again, both me and MOUNWP, otherwise known as Mo, separately talked with the CEO of Castellum, Glen Ives, and what's interesting is despite that, speaking with Glen independently, there was a significant amount of overlap in what both of us came away understanding about Castellum's acquisition strategy, their organic growth, increased spending, contract timing, and the longer-term vision for the company. Now, at the same time, each conversation also gave us different pieces of information. Now, almost immediately after these conversations, we got a completely separate development involving the United States Navy that initially caused quite a bit of concern. And one of the users just put it in the CTM thread yesterday. Let me just pull that up right here. And it's this one right here, with the headline about how Trump orders Navy to restore old technology in aircraft carriers costing billions. So we're going to be covering that also in the video. And this did get my attention because Castellum's subsidiary SSI, or Special Systems, has worked associated with Aircraft Launch and Recovery Equipment, or ALRE. So naturally the question does become, what does this development mean for Castellum? Does it hurt future opportunities? Does it affect their existing work? And could contracts need to change? And perhaps most importantly, does this development change anything about the growth strategy that Glen just discussed with us? So Mo actually reached back out to Glen after this news came out, just to be clear, and he did state that, let me pull it up for you. He said that, let's see. Yeah, he just got a response, and he said he got the big boss response. He's talking about Glen, and then he said they've anticipated this already, so there's no negative impact. So he did get that response from Glen himself. So, you know, actually, I was gonna talk about the calls first, but let's actually just talk about the development first. So, what Glen reportedly told Mo after he contacted him, and then we'll compare the two separate phone calls. So let's start off with that. So, real quick, I do want to make something very clear, is that neither my conversation nor Mo's conversation was a formal interview or earnings call. When I discuss my conversation, I'm working from my notes and recollection, and this is not a word-for-word transcript. And when I discuss what Mo learned, I'm relying on the summary that he provided of his own separate conversation in the Castellum's updates thread. So nothing in this video should be interpreted as financial advice. So getting all that out of the way, let's just get into the video, guys. So let's start off with the development. Let me go back to the thread. Yeah, so the Wall Street Journal, again, they reported that President Trump directed the Navy to move away from the electromagnetic launch system being used on the Ford-class aircraft carriers and return to steam-powered catapults on future carriers. Now, if you follow CTM closely, and I know a lot of my audience members do, you can immediately understand why some investors reacted negatively to this, myself included. Not like completely changing the whole investment thesis, but I was thinking that this did suck. Like that was my interpretation. Like, oh man, I even put that like a comment down there saying how, yeah, that does kind of stink. But Castellum's Specialty Systems subsidiary has extensive experience with aircraft launch and recovery equipment, and ALRE has been one of the areas investors have looked at when discussing SSI's positioning within the Navy. So when people first saw that the Navy was moving away from emails, the immediate reaction from some people basically was, I would kind of say it was something along the lines of, hold on 1 minute, doesn't Castellum have exposure to this? I would say that was the first reaction, and that was kind of my reaction as well. And again, for people that reacted, myself included, I did find that to be somewhat of a reasonable question to ask. But we need to make an extremely important distinction. ALRE is much broader than just simply emails. ALRE involves the systems and engineering surrounding the launching and recovery of aircraft abroad carriers. And steam catapults existed long before emails. So moving from electromagnetic catapults back towards steam doesn't mean that aircraft launch and recovery engineering suddenly disappears. It does mean that the underlying technology being used to accomplish part of that mission could change. And another major distinction involves the carrier themselves. Based on the reporting and discussion that we've seen, this isn't simply the Navy ripping emails out of every Ford-class carrier tomorrow. The first Ford-class ships already incorporating emails are in a very different position from future carrier designs. And in fact, one of the arguments being raised against changing course is precisely how complicated and expensive it could be to redesign ships around an entirely different launch architecture. General Atomics, which builds emails, reportedly said that the decision warrants careful reconsideration. And this debate isn't actually new because President Trump has publicly criticized electromagnetic catapults for years, and he's had this stance for quite a while. If you go here, you're going to see a few of the quotes. So specifically, you can see him say, and this is a quote from Trump saying how, you can just read that right there. I'll pause it for you for a second. You can just look at that. I'm going to put it in order seriously. And they're spending billions of dollars to build stupid electric. And the problem is when it breaks, you have to send up MIT, get the most brilliant people in the world, to fly them out. The steam, they said, can fix it with a hammer and blowtorch. And it works just as well, if not better. So that's the stance right there. And then there was another one somewhere below. Let me see. There was another quote. Oh, okay, no, this is the same quote, actually. So yeah, so that was the quote and that was the stance right there from the president. And while the news directive is clearly significant, the underlying political risk surrounding emails isn't something that appeared completely out of nowhere. So just making that very clear, which is also part of the reason why Glen, again, I'm just making assumptions, and again, the answer that Mo got from him saying how they've already anticipated this, so this isn't a surprise to them. This isn't a surprise to CTM is all I'm getting at. So even though it's not a surprise for them, I don't want to necessarily just dismiss the concern entirely, because there still is a legitimate question here. Because if part of Castellum's future growth opportunity was expected to come from supporting emails related work on future aircraft carriers, and future carriers no longer use that emails, then obviously you do need to reassess the specific opportunity. And again, that doesn't automatically mean that, again, it could mean that, but it also doesn't mean that existing backlog would disappear. It could, but it couldn't. And it definitely doesn't mean that Castellum suddenly loses its entire ALRE business. But I also don't think that the responsible response is that this means absolutely nothing. I don't think you should think that either, because changes in defense procurement can affect contractors, and programs can change, and requirements can change, and contracts can be modified, and future opportunities can become smaller, larger, or just simply different. And ironically, that connects directly to something Glen has just explained to me before this news broke. And it's the fact that, and I did talk about this in my summary. Again, if you're interested to read through the report yourself, feel free to check out the Discord. I'll also scroll through it slowly. Not right now, but I'll scroll through it slowly. But what I'm talking about is the fact that government contracting doesn't operate in a perfectly straight line. And that was highlighted in my report. And you're operating partly at the speed and direction of the government. And again, priorities change, funding changes, program timelines change, and contractors, they do have to adapt. Now, this is where things get particularly interesting to me because, again, after the news was circulating and people in the community began asking questions, Mo reached out. And again, Castellum had already anticipated this. Again, according to what he said right here. What he said, the response was right there about they've anticipated this. There's no negative impact. So obviously that's good, and that's an important piece of context. And I'm not presenting this as a formal public statement from Castellum. I'm telling you what Mo reported after communicating with Glen. And whether the technology is steam or electric, Castellum still expects there to be a significant role involving engineering, system integration, and software engineering. And when you do understand what Castellum actually does, that does make sense conceptually, and SSI isn't manufacturing the electromagnetic magnetic catapult itself. This is an engineering and technical services business, and changing a massive naval system from one technology to another doesn't eliminate engineering. Now, if anything, major systems changes can create entirely different engineering and integration requirements. Now, that doesn't mean that Castellum is guaranteed to win that work. That's extremely important, but it does mean that no future emails equals no future Castellum opportunity. Now, again, another point that I want to get to is about the discussion afterwards is that ALRE itself has historically operated with steam catapult systems. Now, emails is a newer launch technology incorporated into the Ford-class architecture. Aircraft still have launch, they still have to launch, aircrafts still have to recover, and systems still have to communicate. And hardware and software still have to integrate, and testing still has to happen, and engineering support still has to happen. So, the technology underneath that ecosystem changing doesn't automatically remove the need for the ecosystem. And that's probably the most important takeaway that I have from this development right now. I wouldn't call the Trump directive bullish for Castellum because, that would be, at best, that would be reaching. But based on the information that we currently have right now, I also don't think that there's enough evidence to say that this destroys Castellum's ALRE opportunity or wipes out a meaningful portion of the backlog. So the responsible position, in my opinion, is to watch how the Navy actually implements the directive, what happens to future career designs, and whether existing or anticipated contracts are modified, and what role SSI can play under a STEAM-based architecture. And what's crazy is that this development came almost immediately after Glen and I discussed this exact characteristic of government backlog. Not necessarily regarding emails, but the unpredictability surrounding contract timing and government priorities. So again, if you just join the Discord, again, completely free, and you just take a look about, you just scroll up just a little bit because I didn't post this too long ago. You're going to see my full summary of call with Glen Ives. Feel free to check that out. And again, there's also Mo's right here, where he put it in this thread right here. But the unpredictability of contract timing and government priorities, let's get into that. One of the things that I wanted clarification to call during my conversation with Glen was the backlog, because Castellum, they have built a significant backlog, but again, investors, they do want to see the backlog turn into actual revenue. Let me scroll to the actual section. No, right here. Yeah, backlog conversion. So yeah, we talked about this here. This is where that section is mentioned. And Glen didn't try to tell me that the process would be perfectly linear. Regarding backlog and how investors want to see that backlog turn into actual revenue, his explanation was essentially that one advantage of government contracting is that awarded work can be relatively dependable. But the disadvantage is that you're operating at the speed of the government, and programs can ramp slower than anticipated, fundings can shift, priorities can change, and work can temporarily slow down, and timing can also change. And then almost immediately after Glen gave me and Glen had a discussion, the community and the world did get a real world example of exactly what the risks look like, because the United States government potentially changing the underlying technology being used on future aircraft carriers, that's government contracting risk happening right in front of us in real time. So where I want to zoom out now is comparing the two calls that me and Mo had, because Mo and I both spoke with Glenn separately. Again, our calls were not correlated. We weren't in a call together. And I think comparing what we independently came away with was actually pretty valuable, in my opinion. You can come with your own conclusions and your own opinions. But there was significant overlap between the two conversations. But we also focused on different areas. His conversation went deeper into the model Glen appears to envision for Castellum. And my conversation went deeper into the financial structure supporting that model and some of the questions investors have been asking about debt, cash, acquisitions, backlog, and profitability. Now, when you combine the two, I think you get a much clearer picture. So, one of the more interesting things from Mo's conversation was Glenn pointing towards precise systems as an example of the type of path that Castellum is pursuing. And precise systems was founded in 1990. And again, I have this all frozen for you. You can just read it yourself right now. You can read it while I'm also giving the video, or you can pause the video and read. But right here, Precise was founded in 1990 and operates across engineering, program management, software development, and other areas supporting organizations including the Navy, Marine Corps, and Air Force. And for years, it was essentially an established government contractor. Now, then he also talks about how private equity investment helped turn the company into more of an acquisition platform. And Precise subsequently completed multiple acquisitions, adding different capabilities, physical sciences research, CBRNE work, embedded hardware, software, open architecture avionics, systems engineering, cybersecurity, modeling and simulation. And the important thing wasn't simply buy companies and make revenue bigger. Each acquisition potentially added capabilities, customers, and contract access. And that's very similar to what Glenn explained to me. Now, this was one of the biggest questions that I asked. Let me go back to mine. So let me see where I got it right here. Yeah, so it's right here. And under section 4 of this isn't just about making one acquisition, because again, if Castellum has roughly $17 million in cash, here's the question right here. If Castellum has $17 million, why don't they just use it to grow organically? And for a company around Castellum's size, that is significant, $17 million in cash. So again, what I mean by grow organically is, obviously just they could hire more employees, they could invest in existing subsidiaries, they could pursue more contracts, and they could forget about acquisitions. Now, after talking with Glenn, I think the answer is pretty straightforward, and again, Glenn usually does come straightforward with the answers that he does give, in my personal opinion, because what he put out was saying how they are investing organically. The acquisition strategy isn't replacing organic growth. The issue is speed and capability. And having $17 million in cash means you have $17 million in capital. It doesn't mean you instantly have $17 million in new revenue. And it doesn't instantly give you new customers. And it does not give you experienced employees in a new specialty. And it doesn't give you relationships with new government agencies. And also, it does not automatically give you access to adjacent markets. You can build those things organically, but obviously it would take time. An acquisition can potentially buy an established business that already possesses them. So this is probably the single biggest theme connecting both conversations. Castellum's strategy isn't organic growth or acquisition. A better way to put it would be organic growth plus the acquisitions. And they're investing internally. They're spending on business development. They're pursuing contracts. They're building existing subsidiaries. And simultaneously, they're trying to acquire businesses that can accelerate the process. And Mo described what Glenn essentially sees as a growth flywheel. You acquire, and again, Mo talked about this in his conversation right here. and which is basically you acquire an accretive business. That business potentially brings additional capabilities and contract vehicles, and those vehicles create access to even more opportunities. Winning more work, winning more work grows revenue and headcount, and the larger business then has greater resources to invest in business capture and potentially pursue another acquisition, and then the process just keeps on repeating itself. So this is another important distinction from my conversation, and it's under this section right here about how, let me find it. Oh no, I actually think it's up more. Yeah, right here, under section 4. This isn't just about making one acquisition. So again, Glen isn't talking about making one acquisition and then just declaring victory right there and that's it. Because according to my notes, the broader acquisition is to potentially use organic growth, acquisitions, new contracts, adjacent markets, and additional capabilities to get Castellum into roughly the $100 million to $150 million range and eventually build something substantially larger and potentially much larger over the long term. And I want to be careful with that statement because that's how I understood the long-term ambition that Glen discussed with me. And again, this is not financial guidance, and that is not me saying that Castellum is guaranteed to reach $150 million. And it's certainly not a promise that Castellum becomes a $500 million company. Management obviously still has to execute, and the point is simply that the strategy makes more sense when you understand the scale management is attempting to reach, and they're not optimizing the company around staying at roughly $55 to $60 million forever. So another major point where our another major point where our conversations overlapped was regarding acquisitions timing. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. Glen explained to me that Castellum is already beyond simply saying we'd like to buy something today. And according to my notes, they're evaluating companies and communicating with potential targets, but that doesn't mean that a deal is guaranteed tomorrow. And one of the reasons is something investors sometimes forget. There are two sides to an acquisition. Castellum can want to buy a company. That doesn't mean that the owner wants to sell today. And some targets are founder owned and others can be controlled by private equity. And the seller might want another 6 months, maybe another year, and maybe they aren't even ready at all. And I want to clarify something because this could essentially be misunderstood. When 6 to 12 months came up during my conversation, Glen was not telling me Castellum's acquisition is 6 to 12 months away. He was explaining that certain potential sellers can operate on those kinds of timelines. And Mo came away with a similar broader point. And Castellum can identify attractive targets, maintain relationships, and remain financially prepared, but ultimately the transaction window isn't entirely under Castellum's control. Now, another area that I talked about is regarding their zero debt approach, their approach regarding zero debt. And Glen explained that there was a point when Castellum carried approximately $12 million in debt while having limited cash flow, and that obviously restricted their flexibility. Now, today, the company is in a very different position. It has eliminated that debt and built a substantial cash position, but I didn't come away from the conversation believing Glen is philosophically opposed to debt because his response made me interpret the opposite, because my understanding was that they don't take on debt simply because you can. They're preserving their financial flexibility that they have right now. However, if a future deal requires debt and the opportunity actually justifies it, Castellum could potentially use it. So the strategy is not Castellum will never use debt under any means necessary. It's more closer to don't use debt until there's a compelling reason to use it. So now, we're going to get to another area where our separate conversations lined up remarkably well. and Castellum's expenses have increased, and naturally, some investors look at that and say, why not cut spending and make the financial statements look better? And Glenn answers to both conversation was essentially that management could prioritize near-term profitability more heavily if that were the primary objective. And let me go to that part right now. Not that. Nope, not the ceiling. Yeah, right here, section 8. So again, he did say things about how you can cut business development spending. He could reduce acquisition related spending. He could reduce other growth investments. And mathematically, if everything else stays equal, EBITDA and profitability can look better. But then you gotta take a second and ask yourself, what did you sacrifice to make today's numbers look better? That's the trade-off that management is making, because Glenn, he doesn't want Castellum to become a stagnant $55 million or $60 million company that produces a little profit every year and then stops aggressively pursuing growth. His position, based on my conversation, is that shareholders invested in a public growth company because they expect the company to become substantially larger. So, management is consciously accepting pressure on near-term profitability in exchange for investments it believes can create more growth later. Now, I do think that it's extremely important, and that is extremely important, but explaining the strategy does not mean management gets a free pass forever, because eventually the investments, they do have to produce something. Business development spending needs to contribute to wins, and backlog needs to convert into revenue, and the acquisition strategy eventually needs to produce a transaction, and increased spending ultimately needs to translate into stronger financial results. Otherwise, at some point, investors have every right to question whether the strategy is actually working. And that's why my conversation with Glenn didn't eliminate things that I'm monitoring. It simply gave me a clearer framework for evaluating them. Now, another thing Glenn clarified for me was contract ceilings. And this is especially important with defense companies, because you'll sometimes see enormous numbers attached to contract announcements. And a company, it might participate in a vehicle worth $100 million, $250 million, or even a $1 billion ceiling. That does not mean that Castellum, there you go, section 6. That doesn't mean that Castellum assumes it will receive every dollar under that vehicle. There's a difference between maximum potential contract value and revenue Castellum actually wins and recognizes. And Glenn made clear to me that management understands that distinction. So when evaluating Castellum, I don't think investors should simply add every contract ceiling together and call that future revenue. You have to look at actual awards, task orders, backlog, and ultimately revenue recognition. Now, going back to Mo's conversation, he also added specific context around something called PMA 290. Let me find that right here. Yeah, PMA 290. Here you go. PMA 290. And he talked about it in his summary as a driver expected to ramp and contribute to the second half growth. Now, that's useful because my conversation focused more broadly on why backlog conversion can move around, but put the two together and the message starts to become more clear. It's that management isn't saying every contract converts perfectly quarter by quarter, but they're also not saying don't expect growth. They're pointing towards specific programs they believe can contribute as they ramp. Now, Castellum has to actually show us that in the numbers. And another interesting topic from Mo's conversation was Glen's discussion of the Russell 2000. And according to Mo, Glen views getting Castellum into the Russell 2000 as a near-term objective or milestone. Now, the reason that matters is because inclusion is a major index, and it can potentially bring passive ownership from funds tracking that index. And another interesting topic from Mo's conversation was Glen's discussion of the Russell 2000. So, according to Mo's summary, Glen discussed getting Castellum to the Russell 2000 as a goal or milestone for the company. And if you're asking why that would matter, it's because inclusion in a major index can potentially introduce an entirely different source of demand for the stock. Funds and ETFs designed to track the Russell 2000 generally need exposure to the companies included in that index. And for a relatively small company like Castellum, which can trade with limited liquidity and experience significant volatility, broader institutional and passive ownership could potentially help create a more diversified shareholder base. But I also don't want to overstate this. So, Russell 2000 inclusion wouldn't magically fix Castellum CTM, and it wouldn't guarantee that the stock goes higher. And ultimately, Castellum would still need the underlying business to execute. And according to most summary, Glen viewed something like Russell 2000 inclusion as a more of a stepping stone in a much larger strategy. And I think that brings us back to the central theme of both conversations. Glen isn't thinking about where Castellum is next week. He's talking about trying to build a substantially larger defense contractor over a period of years. Now, another thing I found interesting, because again, there's lots of things that I find interesting in these takeaways, but Mo and I, we didn't have the same conversation with Glen. We spoke with him separately and we asked different questions and we focused on different issues. And afterward, we separately wrote down what we believed were the major takeaways here. Yet, if you do that, you still see how much overlap that there was because both conversations pointed towards acquisitions being used alongside organic growth. Both pointed toward acquisitions being about more than simply purchasing revenue, and both emphasized capabilities, contract vehicles, customers, and access to new opportunities. And both conversations indicated that management is intentionally spending money to support future growth. And both conversations emphasized that near-term profitability could potentially look better if Castellum reduced those investments. And also, both the conversations suggested that Glen doesn't want Castellum optimized around remaining at its current size. And both conversations also emphasize patience around things management cannot completely control, such as seller timing, government contract timing, program ramps, and ultimately the speed at which the entire strategy can develop. And to me, that's significant, not because two conversations prove that the strategy will work, because they don't, but it's because when two people speak with the CEO independently and come away with essentially the same understanding of the company's broader strategy, it at least gives us greater clarity about what management is actually trying to accomplish. Now, at the same time, the calls weren't redundant, and I think that's important too because my conversation went deeper into Castellum's balance sheet and financial flexibility, and we discussed that roughly $17 million cash position and why management made the decision to value zero debt the way that they do, and the fact that zero debt doesn't necessarily mean that Castellum would never use debt, and also about how current investments are being funded and why having cash doesn't eliminate the rationale for acquisitions or contract ceilings, backlog conversion, and the trade-off between near-term profitability and long-term growth. And Mo's conversation provided different context because he got the precise systems comparison. He's got a much more detailed explanation of the acquisition flywheel. He discussed PMA 290 and its expected ramp, and he got additional context surrounding the Russell 2000. And he got an example of what a successful acquisition led government contractor could potentially look like over time. So, me personally, I don't view this as competing summaries. I think they complement one another and they put both together. And when you put both together, and you get a more complete picture of Castellum strategy. And which brings us right back to what I wanted, which I said I was going to talk about it at the last part, but I actually talked about it first. So it's going to be first and last is what we're going to be talking about. It's regarding the news that came out regarding Trump and emails and Steam. So, again, real quick, just take a second to think about the timing because we're talking about management building a company around more capabilities, more contract vehicles, more customers, more technical expertise, more diversification, and then suddenly the government potentially changes direction on a major piece of naval technology. That's exactly why diversification matters, and if Castellum were essentially a one program company completely dependent on emails, this development would be dramatically more concerning. But that's not what CTM is, and even within ALRE, the work isn't necessarily limited to one specific catapult technology. And according to what Mo reported, after reaching out to Glen, Castellum had anticipated the issues, and Glen's response was essentially that regardless of whether the technology is steam or electromagnetic, there remains substantial engineering, systems integration, and software engineering work. And again, this doesn't guarantee that Castellum receives that work, but it changes how I look at the headline. Now, there's another possibility that investors were discussing that I also do think is worth mentioning. But we need to treat it as a possibility, not a fact. Because changing the design of future carriers from emails back towards steam isn't necessarily as simple as swapping one machine for another. These are massive integrated systems, and if future carrier designs have to be modified around a different launch architecture, that could itself require engineering, systems integration, testing, software work, and other technical services. Now, could Castellum participate in some of that? Potentially, but at the end of the day, we don't know, and I don't want to turn a potentially negative policy development into some automatic bullish catalyst. That's speculation until contracts are actually awarded, and the more reasonable conclusion is that the nature of the opportunity could change rather than simply disappear. Now, it's also worth understanding that this policy decision isn't occurring without debate, because General Atomics, the company behind emails, repeatedly said that the decision warrants careful reconsideration. And one of the major issues is cost and complexity, and the Ford-class architecture was designed around electromagnetic launch systems. And changing that architecture can introduce substantial redesign challenges. And President Trump's skepticism toward emails itself isn't new. He was publicly criticizing electromagnetic catapults years ago. I showed you the quotes earlier, so there's a broader debate here about reliability, cost, maintenance, technical complexity, and whether reverting to steam ultimately makes operational and financial sense. And again, I'm not a naval engineer, and I'm not going to sit here and pretend I can tell the United States Navy which catapult technology it should use. But for us as Castellum investors, the important question is, it wouldn't be, is steam better than emails? The important question you should be asking is, what does the final procurement decision mean for the work Castellum can compete for? That's what matters financially. And what I want to clearly separate is what we do know to what we don't know. Because right now, I don't think we have enough public information to calculate some exact dollar impact on Castellum. I have not seen evidence establishing that a specific dollar amount of Castellum's reported backlog has suddenly disappeared because of this decision. I have not seen evidence that the company's existing ALRE-related work has simply been canceled, and I have not seen enough information to quantify exactly how much future emails-related opportunity Castellum might lose versus how much steam-related engineering opportunity could replace it. So I'm not going to make those numbers up. This is precisely the type of situation where investors need to wait for actual contract modifications, Navy procurement decisions, and company disclosures. And if we get more concrete information, then we update the thesis accordingly. So what would actually make this development more concerning to me is if we learned that the existing Castellum contracts were being materially reduced or canceled because of this policy change. That's important. Now, if management disclosed that a meaningful portion of expected future revenue had been tied specifically to email's expansion that was no longer expected to happen, that's an important thing to understand or to consider. And if backlog materially declined because work was removed rather than simply moving around in timing, that's also important. Or if Castellum proved unable to adapt its ALRE expertise toward whatever architecture the Navy ultimately chooses, that's something that I'd want to understand. And those would be tangible changes to the business. But a headline saying Trump wants steam instead of electromagnetic catapults doesn't by itself give us enough information to conclude any of those things. And I also want to be precise about Mo reaching out to Glen, because the fact that Glen reportedly said Castellum anticipated this and still sees a significant role regardless of the technology is reassuring context. But investors should understand what that does and what it doesn't mean, because it tells us that management doesn't appear to view the policy development as destroying Castellum's role in this area. And it does suggest that management believes SSI's engineering capabilities can remain relevant under different launch technologies. But it doesn't guarantee future contract awards. It doesn't tell us exactly what future revenue will be, and it doesn't replace what formal company formal company disclosures. So I view Glen's reported response as useful context, not as a reason to stop monitoring the situation. And strangely enough, this development actually helps illustrate why Glen appears so focused on acquisitions and diversification. Excuse me. Now, think about what we've just watched happen. A company can have technical expertise, it can build relationships, it can participate in government programs, it can spend years positioning itself, and that's the nature of this industry. The more capabilities that CTM has, the more agencies it serves, and the more contract vehicles it has access to, the more customers it supports, and the more diversified its revenue base becomes, the less dependent of the overall company becomes on any single program or technology. That's one of the strategic benefits of getting bigger. And it goes back to precise systems example that Mo discussed in the Castellum updates thread. And the acquisitions weren't simply about making revenue bigger on paper. The added different capabilities across different areas of defense and government services. That's the type of diversification Castellum appears to be trying to build. However, this is where investors have to remain disciplined. Talking about an acquisition strategy is not the same as completing an acquisition. Having conversations with potential sellers is not the same thing as closing a transaction. Having $17 million in cash is not the same thing as successfully deploying that capital. And pointing toward precise systems as an example doesn't mean that Castellum automatically becomes precise systems. Execution is everything, and that's why I continue to view the acquisition as one of the biggest things to monitor. And I understand the strategy considerably better after speaking with Glen, and I do understand why management doesn't want to force a bad transaction simply because investors are impatient. And I also understand that seller timing isn't entirely under Castellum's control. But eventually, if acquisitions are supposed to be a central component of the growth model, shareholders need to see one actually happen. And that same principle also applies to the backlog, because a large backlog is encouraging, and winning contracts is encouraging, and getting access to larger contract vehicles is encouraging, but eventually that has to become revenue. Glen gave me useful context about why conversion isn't necessarily linear. And Mo received more specific context surrounding programs like PMA 290 ramping, and that is helpful, but ultimately, the income statement has to confirm the story. And that's why the next several quarters matter. And if we start seeing stronger revenue contribution from programs that have been ramping, that supports management's explanation. And if backlog remains large, but revenue repeatedly fails to accelerate over an extended period, then investors have to ask harder questions. That's not being bearish, that's evaluating whether management is executing or not. And the exact standard applies to expenses. Now, to be clear, I do understand Glen's argument. If Castellum cuts business development spending, acquisition spending, and other growth investments, the company could potentially produce prettier near-term numbers, but management believes that would sacrifice opportunities of building something substantially larger. Now, investors need to, in my opinion, I would say that investors, they do need to give those investments enough time to work, but not necessarily unlimited time, if that makes sense, because eventually we should be able to point towards something tangible and then be able to say that's what this spending produced. It produced a contract, a new customer, a capability, an acquisition, higher revenue, and better margins as the company scales. It needs to show something because the long-term thesis ultimately has to show up in financial results. Now, one of Glen's final comments during my conversation with him, let me just point it out. Let me just go down to the bottom section of, right here, under the section of Glen's final message to shareholders. And let me see. Let me find the actual part where I said that. He said, yeah, right here. So it's basically saying where I kind of summarize his basic message right there. And now, taken completely out of context, this is going to sound dismissive, his basic message, where it says, if someone ultimately believes Castellum isn't the right investment for them, they should liquidate their position and move on. Completely out of context, that sounds dismissive. But that's not how I interpreted his message with the broader conversation, because my interpretation was that Glen understands management has chosen a particular strategy, and they're not promising that every quarter will look perfect. He didn't promise that ever. And they're not promising that backlog converts on a perfectly predictable schedule. And they're not going to force an acquisition simply because shareholders want one immediately. And they're not planning to cut investments that they believe are important for long-term growth simply to make 1 or 2 quarters look prettier. So shareholders ultimately have to decide, do they agree with the strategy? And more importantly, do they believe that this management can execute it? Those are 2 different questions that you need to come to your own conclusion and ask if it's a yes or a no on both of those questions. And for me, neither conversation with Glen eliminated the risks surrounding Castellum at all. And neither did his reported response to the Navy news. I still want to see backlog convert into meaningful revenue. I still want to see the acquisition strategy produce an actual transaction. And I still want today's investments in business development and growth to eventually show up in stronger financial performance. And now I'm also going to be watching how this Navy policy development actually affects SSI and ALRE opportunities. But I have a considerably clearer understanding of why management is making the decision it's making. And after comparing my conversation with Mo's completely separate conversation, I do think that the overall strategy is pretty clear. And if I had to summarize everything Glen communicated across these conversations in one equation, it would be organic growth plus acquisitions plus continued investment in business development plus new capabilities and contract access, which equals an attempt to build a much larger defense contractor over time. Not next week, not necessarily next quarter, but over time. And the biggest question surrounding CTM isn't whether that strategy sounds good on paper, because of course it sounds good on paper. The question is whether Castellum CTM can execute. So, after everything that's happened over the last couple of days, here's where I land. The Trump administration's move toward steam catapults on future aircraft and carriers is absolutely worth paying attention to if you're a shareholder of CTM. I would not dismiss it because it could alter the future opportunity landscape surrounding emails, and contracts could potentially require modification, and future work could look different from what investors previously expected. But based on what we currently know, I also don't see evidence supporting the extreme conclusion that Castellum's ALRE business has suddenly been destroyed or that some massive portion of backlog has automatically disappeared. And aircraft launch and recovery equipment existed with steam. It exists with electromagnetic systems. And according to what Mo reported after contacting Glen, Management had anticipated this issue and believes CTM can continue playing a meaningful engineering, systems integration, and software role, regardless of which technology ultimately moves forward. Now, management has to prove that, and that's really the theme of this entire video. And he explained it separately to Mo, and he explained it separately to me. And the explanations were remarkably consistent because now shareholders have a clearer framework for judging execution. And does that backlog convert? Does PMA 290 ramp up? Does accretive acquisition actually happen? And do today's growth investments generate tomorrow's results? And can Castellum adapt when government priorities change? And can management ultimately take this roughly $55 to $60 million business and build the substantially larger defense contractor that Glen appears to envision? Those are the questions that I'm going to be watching, because ultimately the thesis isn't going to be proven by what Glen tells me. It's not going to be proven by what Glen tells Mo, and it's definitely not going to be proven by what people say in Discord. It's going to be proven by execution and by the numbers. So let me know what you guys think in the comment section below. And do you think that the Navy's decision to potentially return to Steam changes your view on Castellum? And what was your biggest takeaway from the two separate conversations that both me and Mo had with Glen? And what do you see management's accomplishment? What do you see, or what do you want to see management accomplish over the next several quarters and the upcoming years? So again, if you did enjoy the content, feel free to hit the like and subscribe button. And if you do wish to support the channel, feel free to become a member. No pressure at all. And also feel free to join the Discord. Again, free of charge, so you can be a part of a bunch of other shareholders of CTM and also get the updates that we do on the Discord. So with that being said, David over here at InvestQ out. Stay safe, and I'll see you on the next video. Peace out.